Hello everybody, welcome back to the 31st edition of the Subscriber Portfolio Review series. This is one of the most favorite series that I do on this channel. One, it promotes transparency, something a lot of other finance creators can't do for some reason. Two, we get to learn about new stocks that I may not have heard of and that you guys may not have heard of either. And lastly, it gives us exposure to different investing styles and strategies as well. Because if it's just one strategy or one style that we're doing or listening to, that's not a great way to grow as an investor and person if you're talking about anything in life. So today's portfolio update will be a special one because it is a channel member, which is SoFi Boy Magerspeds. He gives me $5 every single month and I get to scam him, but at least he gets access to over 200 vaulted old videos of mine. Those are like gold if I ever blow up. Also, shout out to Redwood. But let's get on to the video regardless.
Hello, I like money.
If you're not familiar with this style of video, I like to ask the investor what their age is, their objectives of the portfolio are before I go over the holdings so I can give more of a fair assessment, because obviously some people have different objectives when they're investing. Some people are older, maybe investing for dividend income, vice versa if you're younger. And he admits he's a degenerate before we even get into it, so let's just acknowledge that. But we can respect it here on the Ryan Dangler Show. He shares that he's 17 years old and he does not entirely stick to the long-term game because he wants to be rich at a young age. Keep in mind, he's also a Domino's pizza worker. He has inside information there. He believes when you're young, you should be taking the biggest risk. He really likes the CEO of SoFi, and he's clearly passionate about the company and takes much pride. The large percentage holding is equivalent to the much larger amount of time I spend researching SoFi. Holding a lot of REITs as well to hopefully benefit from the eventual interest rate cuts, I can respect that. In the future, he probably won't hold them. I believe we may get a large market downturn, and he's waiting to load up on some stocks that he loves, such as Visa, Apple, Microsoft, Costco, etc. One could say double compounders of cheese. In all seriousness though, this should be a really interesting one to go over. He shares he doesn't like the taxable event that happens whenever you get a dividend, which I can respect, and he may want to move to Roth, and he's not very materialistic, but he just wants a purple Porsche. I think I know a guy. Alright, I want to thank the sponsor of today's video, the Delta app by eToro. Delta is the app that I personally use to track all of my stocks so I know firsthand whenever one of my favorite stocks is on a dip or up for the day. It's perfect for me personally because I can open it up at school. Immediately, I see the companies that are on up or down for the day, and I know immediately what stocks that I want to go buy from there. There's no better adrenaline rush than seeing one of your favorite companies getting red for the day. And I know mainly on this channel that we cover stocks, but if you're into crypto, NFTs, or any of that kind of stuff, you can also track it there as well. So there's a large variety of stuff that you're available to track there. This is 100% free too, which is one of the huge reasons that I'm partnering with them. All you got to do is use my code in the description box. You can download it 100% free. This is an investment tracker, not a brokerage. You're not buying stocks on here. But if you do want to connect your brokerage to Delta, you can do that and track your portfolio. It's way easier than manually doing it. Thank you to Delta once again for sponsoring today's video. Alright, so I'll be completely honest with this entire portfolio. Just because he pays me every month and I grift him and I do all these other bad things to him, I will always keep it honest with you. And having 53.89% of your portfolio in SoFi right now, it's a bet to say the least. And he acknowledges it, I understand. But me personally, if I'm willing to allocate, half my portfolio, half my net worth potentially into something, we don't know that, I'd like it to be something that definitely has that kind of growth that SoFi has, but also has a lot more security and predictability. That's just me personally. I'd like to sleep better at night. There's a couple of companies that come to mind. Visa, number one of them. I think Visa is just one of those companies. I could put half my portfolio into it, piss off for 20 years, and have a whole lot of money coming back from where I originally invested. It's just one of those companies. But, he's done his conviction on it, guys. Trust me. Like, if you're in the Discord link in the description, you want to send your portfolio, do it there. And you've talked to this guy, like, he's very highly convicted in it, and I can respect that for sure. As a business, I really don't, I'm not too deep, like, knowledge-wise on SoFi. I don't really have a bare look at it, but I do know it's a very volatile stock. And if he's in it for the long term, like he says it is, I think it could go well for him. I just don't love the half of your portfolio in it. That's just me personally. I don't have a position that's over 10% right now besides Microsoft. So it's certainly a bet, and it's good that he acknowledges it. He's very highly convicted. He's done his research on it, but honestly, I just don't love it. Next, he owns Vici. This is one of his REIT plays that he was talking about. I could definitely respect that a lot more. It's pretty high allocation into SoFi looking at it now, and you're going to see on the pie chart as well when it comes up. but pretty solid holding. It's been on a bit of a decline recently. Obviously, interest rates are going to hurt the company in the short term, but as a long-term investor and as somebody who buys an asset for the long term, as long as nothing has changed with the business itself, I really don't care. It's definitely going to be a time when interest rates recover. We're going to see a big price appreciation in Vici and all the other REITs right now, and I've just been buying a lot of Vici, kind of holding on to my realty income, reinvesting those dividends every quarter or every month for some of these companies, and just letting it ride from there. And low key, if you sell out of some of these REITs at a time where interest rates are literally at a historical high for us, yeah, I don't have much of a comment for you. I don't think you're a real man's investor, that's for sure. But of course, there is opportunity cost if something would go on a crazy dip. Visa goes to like $30 tomorrow, nothing changes in the business. I'm probably selling out of my realty income and reallocating it, right? Next, he owns Innovative Industrial Properties, which makes up 4.3% of his portfolio. Another REIT, obviously an interest rate recovery play. I don't know much about this one at all. Telephone and Data Systems, which is a telecom company. Don't know much about that. Hershey, this is one of his other plays that he talks a lot about. I like this company, but cocoa prices right now are really concerning, and I don't know enough and haven't done enough due diligence to really determine whether it's going to recover or not. It's a big thing impacting the company right now, but it appears if you bought in the 180s, it's a pretty good recovery play, so congratulations. I would have bought them at 160, 170. I had a good price there. Then he owns MPW, Medical Properties Trust. Of course, we talked this a lot about in the Cash Flow Kings. I don't own it. There's just no reason for me to. It's a big recovery play. I'd rather just invest in some of my core holdings right now and let that money compound instead of, kind of having a speculative play with MPW. I'm not saying MPW is unpredictable. It's definitely undervalued relative to his assets, but it's just something not for me. So I'm staying away for now. Then he owns Automatic Data Processing. I like this holding. I think it's a solid company. 2.87% of the portfolio. Amgen, another quality holding. Bank of America, I really don't own banks. I know Berkshire's big on this one, but I'm just really not a huge banks guy. I'm staying away from banks. Then he owns Realty, not Reality Income, which makes up 2.87% of the portfolio. Definitely an interest rate recovery play. I've held off on buying my realty income. If it hits probably the 40s, I might dabble again. But once again, this is an interest rate recovery play. Certainly a holding that is getting a lot of shit recently for some decent reasons too from investors. A lot of people are investing in it for the dividend, crazy underperformance from the company, but at the same time, I do believe it is undervalued. I'm down about 15% on my realty, not reality income as of recently, and my plan with the stock is as follows. Essentially, I'm going to sell out once it hits 60, 65, start trimming there, and eventually once interest rate recovers, hopefully the stock will follow along as well, and I can get out at some solid gains. At the same time, though, if opportunity cost hits, Costco goes to $300, they go on an 80% dip or something wild like that. Same thing with Visa or any of my core holdings. Starbucks hit 65 maybe. Maybe I'll start trimming and reallocating, but as for now, realty income's a big hold to reinvest those dividends right now. Then he owns CVS. CVS, I think they have a lot of potential. Aetna, but I really don't understand enough for me to personally invest. Then he owns Pepsi. I used to own it, just not enough growth for me to hold on to it really rationally long term. I think it'll underperform on my time horizon. Then he owns Pfizer, another company I don't like. I think it's a bit of a dividend yield trap. I know a lot of people like that dividend for it, but just not a great company. I prefer AbbVie if you're looking at pharma. Then he owns Papa John's, stock ticker PZZA, which is actually a company that he recommended I analyze, and I did for him because he's a channel member, of course. Papa John's is an interesting company. I think Domino's is a better company in terms of pizza play, and I'd like to actually add Domino's at the right price. He's a trader, though, for buying Papa John's when he works at Domino's. It's honestly pretty disgusting. Then, of course, he owns Starbucks, which is the best stock in the entire world. And you could see here what kind of allocation he has towards SoFi, and it makes me a little sick in the stomach, but at least he's highly convicted and aware of the risks associated with it. So overall, what are my thoughts on the portfolio? Definitely a lot of mixed stuff in the portfolio. There's no clear direction that I really see, which is not something that you kind of mentioned that you were looking for. I don't love all the allocation of SoFi. If I were a responsible person and I had this portfolio, I would definitely trim out of it, make it like 20 or 25%. Half of the portfolio is kind of crazy, but obviously the conviction is crazy high. But thank you for submitting your portfolio in. I think it's a quality portfolio. I think there are some things you could potentially sell, but some solid individual holdings. Be a channel member like Magerspeds and have me analyze any stock, do any video topic your little heart desires for only a small price of $5 a month. Also, unlimited access to me. I'll talk to you whenever your little heart desires, and access to over 200 unvaulted videos. Thank you all for watching. Smash the like button, subscribe, do Dividend Stocks, Drugs, and have a good one.